Join me as I dive into the ultimate investment showdown, loans versus SIPs. Which one will come out on top in 2025? Let's find out. When it comes to investing, there's always a smart way to grow your money. As we step into 2025, it's essential to evaluate the best options for your hard-earned cash. Two popular investment strategies have been making waves: loans and systematic investment plans, or SIPs. But which one should you choose? Investing in loans can seem attractive with fixed interest rates and a clear repayment plan. However, it's crucial to consider the risks involved. Loan investments can be tied to specific sectors or industries, making them vulnerable to market fluctuations. On the other hand, SIPs offer a diversified portfolio, spreading risk across various assets. This can provide a more stable return on investment. Another dilemma investors face is the potential for high returns versus the risk of losses. Loans can offer higher interest rates, but this comes with a higher risk of borrower default. SIPs, while generally more stable, may not provide the same level of returns. It's essential to weigh these factors and consider your personal risk tolerance. The type of investor you are will also play a significant role in deciding between loans and SIPs. Are you looking for a more hands-on approach, or do you prefer a set-it-and-forget-it strategy? Loans might appeal to those who enjoy being actively involved, while SIPs are better suited for those who prefer a more passive approach. Loans and SIPs work differently, with distinct mechanisms that drive their performance. Loans are tied to the borrower's creditworthiness and the underlying asset, while SIPs invest in a diversified portfolio of stocks, bonds, or other securities. Historically, SIPs have provided more stable returns, but loans have offered higher interest rates in certain market conditions. Market trends also play a significant role in determining the success of loans and SIPs. In a rising interest rate environment, loans may become more attractive, while SIPs may struggle to keep pace. Conversely, in a low interest rate market, SIPs may shine, offering more competitive returns. The current economic climate is also an essential factor to consider. With global markets constantly evolving, it's crucial to assess the impact of economic trends on your investments. A thorough understanding of the market and economic conditions will help you make informed decisions. In terms of historical performance, SIPs have generally provided more consistent returns over the long term. However, loans have offered higher returns in specific sectors, such as real estate or infrastructure. Ultimately, the choice between loans and SIPs depends on your individual financial goals and risk tolerance. So, what's the verdict? Recent statistics suggest that SIPs may have a slight edge in 2025, with projected returns ranging from 8 to 12%. Loans, on the other hand, may offer returns between 10-15%, but with higher risk. It's essential to crunch the numbers and consider your personal financial goals. These insights should give you a better understanding of the opportunities and risks involved. By weighing the pros and cons of each option, you'll be better equipped to make an informed decision. To recap, loans offer higher potential returns, but with higher risk, while SIPs provide more stable returns, but with potentially lower yields. It's essential to consider your risk tolerance, investment horizon, and financial goals when choosing between these two options. Thanks for joining me on this investment showdown. We'd love to hear from you. Comment below with your preferred investment strategy. Don't forget to check out our other videos for more financial advice and insights. To recap, loans offer higher potential returns, but with higher risk, while SIPs provide more stable returns, but with potentially lower yields. It's essential to consider your risk tolerance, investment horizon, and financial goals when choosing between these two options. Thanks for joining me on this investment showdown. We'd love to hear from you. Comment below with your preferred investment strategy. Don't forget to check out our other videos for more financial advice and insights.